All right. What's up, guys? Good morning and happy Monday. We should be good to go. Yeah, looks like we're all good. All right, guys. So we'll dive in here. I got to be in the options room in about like 20, 30 minutes. So we got some time. But yeah, we'll jump in here. So obviously, just pretty crazy push here from the bulls. And I think as far as the next target to the upside, we're kind of looking at that daily 200 SMA. So I think the big question is, do we just rally from here directly into that 200, or do we get some kind of pullback first? And we got to keep in mind, we're up here at these extensions, a good 2 to 3 ATR above that daily 21. And from a percentage standpoint, the S&Ps here, they're like 4.5% above the daily 21, and the QQQ is a good 5% above the daily 21. So where I am from, guys, that's a little bit extended. So I kind of think that's the big question at this point. Got this pretty obvious target up above at that daily 200. Do we just kind of rally straight from here right into the 200? Or is there some kind of flush first? So let me clean this up a little bit. The thing we want to watch for is just signs of exhaustion. Signs of exhaustion meaning all the bullish momentum that took you from here all the way up to this extension. Pretty much we're losing that momentum. The bulls, they start down here with a full tank of gas. Then they start to lose gas. If you lose gas up here, 4 or 5% above that daily 21, pretty much turns gravity back on. And that could pretty quickly pull you back towards that 21. And these are things we know. So in terms of looking for signs of exhaustion, pretty much what I would look for on the big three signals is just a lack of buy signals. So for the S&P futures, we're pretty neutral here. The only buy signal we have for now is the 2-hour chart. And of course, the 2-hour chart still looks great. The 4-hour chart still looks great. I think the market looks pretty good here all the way down to that daily 21. So if later this afternoon, the S&Ps, the Qs were sitting up here at these extensions, but there's no more lower time frame buy signals, to me, it's pretty much a heads up. We're running out of gas. We no longer have the momentum needed to continue to trade further and further above that 21. Probably going to get some sort of flush. And that's kind of the difficulty. We don't know what the flush is going to be. It could literally be like a 4 or 5% pullback. Structure of the daily chart still holds up really good. So signs of exhaustion. The QQQ futures, we're down about 0.5%. And as far as the big three goes, we got a couple left. We got a 2-hour and a 1-hour buy signal. So the 2-hour chart looks good. We're down 0.5%. We're not even testing the 2-hour 21. We got the buy signal on the hourly chart. You got a pretty good looking hourly squeeze. So just things to be mindful of, guys. At least from my perspective, definitely looks like the path of least resistance is to the upside. I think our bottom is in, and I think maybe all the way up into the next Fed meeting in September. I think we got a pretty good shot here at seeing higher prices. The difficulty of getting aggressively long up here is just the fact we could wake up tomorrow, the market, borderline limits down, and it all kind of looks good. But a few things I want to show you before we jump into the watch list, just like food for thought. Things to keep in mind. I think a lot of times the monthly charts, which granted, we don't tend to take too many trades, based directly off the monthly chart. But I do think the monthly chart kind of paints an interesting perspective. So for starters, if you look at a few of, the really like stronger names in the market right now, mainly Apple. Here's what's interesting. You look at Apple back in 2020. It was pretty much the end of the world. We had COVID, all that craziness. Just in terms of like price action and structure, the ebbs and flows of a really bullish trend, all Apple really did during the COVID crash was just pull back to the monthly 21. It found support there, and the party continued. So just pretend we're looking at like a 30-minute chart. Right? It all kind of makes sense. There's your 30-minute squeeze. Squeeze fires to the upside. We hit the typical target, 2 to 3 ATR. Then we get the reversion to the mean. So that pullback makes a lot of sense, right? We always know at some point we're going to push away from the 21. We're going to come back to it. And we found support, and the trend continued. Of course, there's a lot going on in those daily charts. Right? There's a lot of emotion back in early 2020. But in terms of just price action and trend, the monthly chart of Apple never got bearish back in 2020. It just remains perfectly bullish. So what's interesting is, from a monthly charts perspective, the pullback over the last 7 to 8 months, it makes a lot of sense. We're up here at this monthly extension. We've pulled back to the 21, and now we're finding support. We got a brand new squeeze. It's all pretty bullish, guys. So in terms of, like my checklist for a bullish trade, this fits everything. The trend is bullish, and even during that pullback, it remained bullish. The momentum is bullish, and even during that pullback, it remained bullish. Right? The structure is good. Kind of looks like a squeeze that wants to fire to the upside. Now, to up the ante a little bit, Apple's actually one of the first names here to start printing the daily buy signals. So with the big 3 indicator, the daily buy signal means the daily chart and the weekly chart fit all of our criteria. Pretty big stuff here, guys. So you've got a monthly trend and a monthly squeeze. That was never anything but super bullish. Now we're at the point where the weekly chart actually looks really good. I'd love to buy the dip here. We're 4 weeks in a row back above that 21. Histogram, not quite positive, but we're getting there. And then we've got buy signals on every other time frame. Daily all the way down to the 5-minute. So granted, Apple's a little cooked here. I would love to buy it down towards 160. But the point I'm trying to make is, if we can just focus on what we're supposed to focus on as traders, which really at the end of the day is not the news, it's just the chart in front of you. You would have seen clear as day back in 2020. Apple's not really bearish. This thing just made a ridiculous move, and we're pulling back to the 21. If you look at that chart like you would look at a 30-minute chart, you kind of see it for what it's worth through all of the, the noise and the drama. I said to take it a step further, then we check out Tesla's monthly chart. And obviously Tesla's traded lower with the overall market. But at no point has the monthly chart been anything but really bullish. So if the big 3 indicator had a monthly buy signal, both Apple and Tesla, they would have the monthly buy signals. Big monthly squeeze, crazy ass push. Like you needed a pullback. And it pulls back to where it should pull back to. It held. If that's a 15-minute chart or an hourly chart, would kind of strike me as a squeeze that wants to fire to the upside. So until this all changes, there's 2 really big names in the market that are pretty much at the point where the monthly chart has always been bullish. Now the weekly chart starts to improve and everything underneath it. So just kind of taking that same concept and looking at the S&Ps on a monthly chart. Again, I'm not saying we're going back to all-time highs. I'm just trying to offer you a perspective that you're only going to find in the charts. Our monthly chart never really got that bearish. In terms of structure, things got a lot uglier back in 2020. We flushed all the way down here towards -2 on the monthly chart. But the point I'm trying to make is, like, at the peak of just like total craziness across the world, like the COVID shutdown, etc. We're back above the monthly 21. The weekly chart improved. The daily trend improved. It was off to the races. So I'm not quite saying, hey, here comes another 20-month rally. But the point I'm trying to make is, if we continue to hang out here above that monthly 21, mind you, we're in a squeeze. You've got a few market-leading names like Tesla and Apple, which look, I think, phenomenal. And at the same time, our weekly chart is no longer in weekly downtrend, and our daily charts have improved. All to me kind of points towards, until it all changes, path of least resistance being to the upside. So that's how I'm seeing things, guys. Just a bit bigger picture. Expect a pretty good flush at some point. So for conversation's sake, if point B is 450, my best bet is we go from point A to point B. It's probably going to be a couple of good flushes. But for now, that's how I'm seeing the market. That is how I'm seeing the market. So as far as the watch list, I've kind of given you all the reasons I like Apple here. And we'll kind of see when this wants to pull back. Probably one of the only names in the market that's got the buy signal on every time frame. So it's one of those things where, yeah, we're really extended, but there's no signs of exhaustion, at least going into Friday's close. If Apple's sitting up here, a few miles above that daily 21, and there's no buy signals anywhere, we're totally neutral. All right, you're probably getting ready for a pullback. So Apple is top dog on the buy the dip watch list. And then Tesla here actually kind of gives you the dip. So remember, everything's going to move with the market. So if this is finally the week where your S&P start pulling back towards that daily 21, it's going to take everything with it. But as far as Tesla goes, pretty good structure here, guys. There's your first push. There's the first back test towards that daily 21. There's your first test of the 200 since, since like April, May. First test of the 200. Now notice back here how the first test kind of failed. Then you broke through. To me, it kind of makes sense that the first test of the big giant moving average fails a little bit. The key here is we pulled back and we held up really good above that daily 21. So we'll see how this opens up, but into Friday's close, pretty much locked and loaded here. 2 hour, 1 hour, 30 minute, 15 minute, 5 minute, big three. So I think Tesla holds up really good. If the market breaks down, you could probably see this down to about $800. But if the market holds up, I do think into the stock split, could be looking for that path towards $1,000. So Apple and Tesla. Then I think the semiconductors look pretty sharp as well. Pretty sharp as well. So expect a flush. But if the market just generally continues to trend higher, then I think the semis have got a path here towards that daily 200. So as far as my top picks in the semis, we got long NVIDIA last week. We bought some calls here in both the mastery and the options room. It's pretty much my classic trade. There's your push. There's your back test. There's your push. There's your back test. Now we're on top of that luncheon pad. We got the brand new daily squeeze, and you're lighting up here under the surface. Buy signals on the 2 hour chart all the way down to the 15 minute. So it'll fall apart if the market pulls back hard, but the structure lines up here for a push towards 200, 205. So we are digging NVIDIA. We got to stop under the daily 21. Looking for 200. Qualcomm looks pretty good too. Clean this up real quick, but we also got a daily squeeze with the buy signals. And there's your first test of that daily 200. First test fails. Here's your back test. You print a brand new daily squeeze. Lower time frames lighten up. Looking pretty good. So a few gems here in the semis. Micron looks awesome. And then, of course, AMD. Behaving like a little bit of trend here last couple of weeks. So Apple and Tesla. SMH / NVIDIA. And then I think a few of like the ARC kind of things. the short squeeze kind of candidates. ARC looks pretty solid, coiled up there in the daily squeeze. We've got a bunch of buy signals. So as far as the ARC stuff, of course, Tesla's the biggest holding. We have covered here. I'm kind of a bit more interested in like the Zooms, the Rokus, the Shops, the Teledocs, the Sox, the Fox. So T-Doc, we're a little bit early, but I kind of like that. Brand new daily squeeze. Well, not brand new, but brand new from the perspective of the histogram is just trying to shift. Couple closes back above that 21. If that can print a 30-minute, 5-minute buy signal, lines up pretty good. So Teledoc is solid. Shopify is probably the one I'm most interested in. Got a brand new daily squeeze, a little bit neutral. Rocking a 1-hour buy signal for now. And then Roku, which I kind of like here because when Roku moves, it can move quick. Like in 2 days, you're up there towards $100 kind of thing. We got the daily squeeze. Histogram is still trying to shift positive. We've kind of cranked out on Friday the first legit close above that 21 in about a month. So here's what I look for. If we can get, 5-minute, even a 15-minute, 30-minute, just a couple of buy signals on these lower time frames, that'll kind of suggest Roku's ready for a pop towards 95 to $100. So should neutral for now, but waiting on the pretty colors there in Roku. And then one more for you guys here, kind of off the beaten path, is BMY. So this was looking pretty good back here. Then it all kind of gets a little bit sloppy. So last week, BMY kind of cleans up its act a bit. Couple closes back above that 21. Daily squeeze, histogram goes positive. So you got a squeeze with rising momentum. And we got a few buy signals here. So market willing, I think some 2 to 3 week out to expiration calls with an exit under that 21, looking for a push towards 77, 78. Kind of lines up there. So that is what I got, guys. Quick peek here at the futures. Don't focus on the percentage change. Because seeing the S&Ps and Qs down 1%, for whatever reason, can trigger a little bit of emotion. Just focus on structure. Look at a 4-hour chart here of the futures. This is really strong. Okay, so we're down about 0.5%. We're pulling back to +1 ATR on the 4-hour chart. Your structure is literally perfectly fine all the way down to the 21. In other words, this is nothing. Right? That little flush there a couple days ago, that was nothing. From a bigger picture perspective, that flush back here to the daily 21, that was also nothing. Nothing in terms of, we didn't break down, we didn't fail. Party continued. So we got room here, guys. That's kind of the tough thing about this spot. We could, certainly keep pushing. We could pull back to the 4-hour 21. We could pull back to 4,100 and everything in between. Quick look at the futures, the VIX rather. Yeah, VIX pops a bit, which makes sense. So we'll see what's up here with VIX today, and then the dollar. Here's how you look at this. If the Dixie $DXY, if that starts to trade back above that 21 EMA, especially on a closing basis, a little bit more likely the market pulls back a bit from here. And I mean like a buyable dip. Not we go down and make a brand new low. If the dollar kind of fails to start cranking out a couple closes back above that 21, even better if it kind of gets rejected here and then rolls over. Then the bulls keep the party going. So there you have it, guys. Bullish for now, but we're extended. So makes it a bit tough to load the boat. So we'll see what's up this week. As far as I know, we don't have any major economic data. I don't think we got to deal with the Fed again until September. And as far as earnings go, we do have a couple big names left. Let's see, AMD, they already announced. We got NVIDIA coming up in a couple of weeks on the 24th. And then, of course, you have the Tesla stock split. I think 3-1. Yeah, 3-1, which goes into effect on the 25th. So, a couple things coming up, but we will see what Mamacita Market has got in store this week. But guys, I've got a few minutes here. I can hang out and jump in the chat. So if you got any questions, any charts I want to take a look at, let me know and we'll bang them all out here before I got to jump over to the options room. Take those characters through the open. Yeah, Mike. Good question. Yeah, so on my multi-squeeze pro, white means no squeeze. Hey, good morning, Anil. Thoughts on PBR? Pretty sure I used to drink those back in high school. PBRs. Sounds familiar. For a bullish trade, it's in a really weird spot right now. It's an interesting chart. It gets back above that daily 200. Really big moving average. Pulls back to it, which makes sense. It got pretty extended. And it holds up pretty good here. So I would think path of least resistance should be to the upside, to the extent this can actually hold above that daily 200. Let's make sure this is my 200. Yeah. Yeah, I would think path of least resistance should be to the upside if it can hold above that 200. I think you'll get a bit more confirmation that that's actually the case if you can get a couple closes back above that daily 21. So kind of like the over-under game. This flips more and more bullish above that 21. And then it certainly starts to flip a bit bearish under that daily 200. So I kind of wait for a bit more confirmation both ways. Hey, Terry, Janice, Sebastian, good to see y'all. EDT, what you got? Jag X. Earnings tomorrow. So this is kind of the definition of coiled up before earnings. It's a tough read right now because, it's kind of on the center stage. It's on that 21 EMA. And we know a lot of big moves. Most big moves, they're going to start here at that 21. As far as judging or trying to gauge, all right, what's more likely? We make this move to the upside or the downside. That's where I like to lean into my buy or sell signals. So the difficulty with JAG here, it's pretty neutral. I don't have any signals telling me things are bullish, but at the same time, I don't have any signals telling me things are bearish. So with these cheaper stocks, obviously after earnings, things can get a little bit crazy. Let's see, where we're going to open up. Yeah, you'll probably get a better read on it after earnings when we open up here in a bit. It could be up there at $1. It could be at 10 cents. These can be pretty crazy. Hey, good morning, Mike. Yeah, Jared. So good question. I'm actually pretty awful at charting SPART patterns. It's spotting, chart patterns like the cup and handle and things like that. Aside from the squeeze, pretty good at finding those. Though admittedly, that's not too difficult. Yeah, the whole thought process for Tesla here is like kind of from top to bottom. Our monthly trend super bullish, And now we've basically got my favorite trade in the world. A squeeze in an uptrend at the 21 EMA. If I'm looking for 5-minute charts, that's my favorite trade. If it's a 30-minute chart, it's my favorite trade. And I'm probably going to see if Eric can just add the weekly and the monthly buy signals to the big three, because this would have the buy signal. So that's my favorite trade, squeeze plus a buy signal. But then you kind of take it down a couple of notches. Now the weekly chart improves. So maybe one of these, right? The monthly chart never gets hammered, just kind of gets sloppy. Then we get back above that weekly 21. Histogram goes from bearish to neutral to bullish. That all kind of triggers a nice move. But for now, we've improved the weekly structure. The daily chart kind of acts like short-term trend. So do I hold on for a push towards 1250? Maybe not necessarily, but in terms of stacking the odds in our favor, that's what I like about Tesla. That's a really good backdrop. I think something we can work with. Something for the team to work with. Hey, good morning, Alex. Snapperoo. What's Snap been doing? This might be a good reversals candidate. Oh, yeah, great call out. Alex, I'm going to steal this from you and put it on the watch list. That's the kind of guy I am. So this guy's kind of fits my reversals checklist. So in terms of, what can trigger a pretty rapid move to the upside, step 1, oversold on the weekly chart. This would certainly qualify as oversold, deeply oversold. I mean, we're almost 100% away from the weekly 21. But notice how the histogram starts to shift. So basically the bears, they're losing a little bit of steam here. So that's step 1. Alex, I'm kind of digging this. Step 1, oversold on the weekly chart. Step 2, we have to start to close back above that daily 21. Step 3, we have to cancel out all the sell signals. So even though we're oversold can just keep on going lower and lower, kind of like Apple, right? So Apple, based on that rule of thumb, Apple was extended to the upside back here at like 150. But because these time frames continue to print that buy signal, the gas tank just keeps on going. So when Apple goes neutral, loses all that momentum, now there's a better chance we're going to get that flush. So it's the same concept here with something like Snapchat. You put an end to the pain. Basically, the bears reach that point of exhaustion. It's kind of a step in the right direction in terms of, all right, maybe we got a shot here at pushing back towards the upside. The final step, which you're kind of starting to get here in Snapchat, are the lower time frame buy signals. That can basically trigger that explosive move where you're deeply oversold. In that weekly 21 up there at $20, it's going to act like a giant magnet. Right? It's always calling for price to come back home. So when the bears lose control, and then the bulls in the short term can get it to the point where they've got it back above that 21 and the lower time frames have gone full bullish, that can trigger the push. But the beauty of it, guys, is the risk versus reward. So let's take a peek. Let's see. You can go September monthly expiration. Buy a $10 10 strike call. Let's check this out. For conversation's sake, let's say we're actually looking for a push back to 19. Now, I don't think you actually have to. But if the door is open for a move all the way back to that weekly 21, it's probably not asking too much to get a push towards 14, maybe even 15. But for conversation's sake, let's just say we're looking for a push towards 18, 19 bucks. For these reversal trades, I think we can put our exit under the daily 21. So let's just call it 1050. And of course, the P&L changes as you get closer to expiration. But again, just playing with some numbers here, into this Friday. On 10 contracts, if we flush down towards 1050, we're down like not even 50%. So thinking in terms of percentages, which is what actually matters, we're risking 2,000 bucks. So if PayPal slides to 1050 by this Friday, we're down about 40%. Now, I wouldn't look for a move to 19 bucks in a few days, but in terms of risk reward, we're risking about 800 bucks, and lightning strikes, PayPal rallies back to the weekly 21, you're up like 7,000 bucks. In terms of percentages, that's 3.5x. So, in other words, guys, very good risk versus reward. And that's been one of the better trades as of late. And quite frankly, that's been just the entire dynamic of the market. Oversold on the weekly charts. We're back above that daily 21. We cancel out our sell signals. Then things go bullish. Then the party continues. Good call out there. Good call out. So listen, guys, I do got to cut you loose here. I got to be in our options room in like 2 minutes. So let's do this. I'll try to schedule the Wednesday session like 10 minutes earlier. That'll give us a little bit of extra time. And if I missed your question today, we should be able to get to it on Wednesday. So I'll make sure we start off around, maybe 7:30 a.m. Central as opposed to quarter of. But hope y'all found this helpful. Have a good day, guys. Have a great week. Be disciplined. Focus on your rules. And for those of you over in the options room and the mastery, time to get back to work. So I'll talk to y'all soon.